Hi guys, it's Stock Curry, and I'm going to show you the best way to make money in 2023. It's not sexy, you're not going to double your money overnight or become an instant millionaire, but you will be profitable. So let's get into it. As we start to exit this environment of cheap money that we've had over the past 12 years, it's going to be important to get back to how the stock market normally works. That is, how the stock market worked prior to 2008, back when we had normal interest rates, a normal functioning economy, and everything else was, for the most part, fairly normal. Now, it's going to take time to unwind, and for sure, there's still a lot of money in the stock market that still probably needs to be pulled out. I do think that the market might continue to go down for a few more months. But as we get back to a more normal stock market towards, say, the middle of this year, there is a way to make money, but it's going to require a complete shift in your mindset. If you've been investing for less than 12 years, the only thing you've known has been a market that just goes up. All the market does is ever go up. And that's all you've ever known for the last, since 2009, really. That's all the market has done has gone up. So it's important that if that's you and you've been investing since 2009 or later, that you start to understand how the market functions coming out of a major bear market that we're in right now. Because we will come out of this bear market. The bear market will bottom. The market will start going back up again. Now, when it happens, nobody really knows. Some people think the first quarter of this year. Some say the second quarter. Some people even say 2024. But at some point, the market's going to bottom out and it's going to start going back up. Now, when that does, you need to make sure that you are well positioned to take advantage. You may remember trying to invest in late 2020, early 2021, where you could throw a dart at a dartboard and pretty much double your money overnight. Well, those days are gone, okay? You're not going to be able to do that anymore. The days of stocks doubling instantly are gone. There'll still be a few here and there that if enough retail investors get behind them and the float is low enough that they could double, but after a day or two, they just end up coming right back down in most cases. I'm not talking about the pump and dumps. What I'm talking about are the stocks that you can buy long-term and make money on a year, 2 years, 5 years, even 10 years from now. And more importantly, beat the overall market. So the best way to do this is quite simply to get back to the basics, to get back to the fundamentals. If you've tried doing technical analysis trading over the past year, there's a good chance that in many cases you got crushed because all of the technicals get thrown out the window as soon as we get one word from the Fed or some company decides to lower their forecast 2 weeks after reporting earnings. These things have happened all throughout the year, and the technicals have gotten destroyed over and over and over again, both to the upside and the downside, just from random people talking. It has been ridiculous and a very difficult year to do technical analysis. So forget technical analysis. What I'm talking about is fundamental analysis. And no, we're not even talking about historicals here because the historicals have been destroyed as well. There have been many, many times last year in 2022 where the historical analysis got absolutely destroyed, where things that have always happened since the history of some indicator, it didn't happen this time. There have been 80 and 100-year records that were broken in 2022. To say it mildly, this is not a normal market. This has been a horrible bear market, the likes of which we have not seen since 2008. But remember what happened in 2009. The stock market bottomed out, and from there, it went on one of the best rallies in the history of the stock market. So sometime this year, or at the very latest, early 2024, the stock market's going to bottom out. And it's going to rally. and we want to make sure we're positioned. So how do we do that? Rather than just holding on to cash, because we don't know when the market's going to bottom, it's time to start buying some stocks. But what stocks do you buy? Do we go after the big tech stocks? No, in my mind, it's probably not a good idea because their multiples, that is their PE ratios, are still very high. Amazon's still trading around an 80 PE ratio. Tesla's still at 30. And even Apple and Microsoft, some of the others, are still around 25. These PE ratios remain historically high. So instead, I'm buying value stocks. Here you can see the value stock portfolio that I started late last year. And this portfolio is up about 3% as of the recording of this video. As you can see, we have some stocks that are green. We have some stocks that are red. So some profitable, some not profitable. But overall, with this diversified portfolio, we are up 3%. While most people lost money in 2022, a value stock portfolio like the one that I have here has actually made money. And the reason for that is because when you get back to the basics of investing, it's all about value. It's about buying undervalued assets and then selling them later when they get back to fair value or even overvalued. This is the same strategy that Warren Buffett, John Templeton, and countless others have used to become billionaires in the stock market. Now, for the purposes of this channel and for the purposes of this portfolio, we're just going to bring this up to $1 million and then we're going to end the challenge. Now, when you're value investing, you can't expect to become an overnight millionaire. It's not like buying an altcoin where you put $1,000 into it and 2-3 years later it skyrockets and all of a sudden you're worth $1 million. It's not like that at all. This is a lot more certain, but it also takes a lot longer to play out. And this portfolio, based upon the average returns that Warren Buffett got when he first started, combined with the amount of money that we're depositing, we should get this portfolio up to $1 million sometime in the next 10 to 15 years. Now, the way we're doing it is we are depositing $100 a week or $200 every other week, just $200 out of your paycheck, however you want to do it. And that gets us just below the thresholds for the Roth IRA. And then we are using that money to buy value stocks. A value stock is a stock that is undervalued. That is a stock that has a low PE ratio. And what ends up happening is, as the market bottoms out, as money starts to flow back into the stock market, it's usually the value stocks that start rising the fastest. Because big money right now, they're moving out of tech. They're moving out of these growth stocks that are just extremely overvalued. And the money is going into value stocks, that is stocks that are undervalued, much like the stocks that we bought in the portfolio. So I just want to review some of the stocks we have real fast, kind of show you guys what we're holding in this portfolio. And then I'll show you the stocks that I bought on Friday and kind of give you some pointers on where you can go from here. The stocks we have in the portfolio so far include IPI, Intrepid Potash, LBTYA, which is Liberty Global A shares, SBLK, Star Bulk Carriers, KLIC, Kaliki and Sofa Industries, GT, Goodyear Tire and Rubber, CLF, Cleveland Cliffs, VALE, Vale, ECPG, Encore Capital Group, HIMX, Hymax Technologies, Citigroup, UMC, United Microelectronics, ALLY, Ally Financial, WBA, Walgreens Boots Alliance, GOGL, Golden Ocean, BHF, Bright House Financial, QFIN, 360 Digitech, FINV, Finvolution, ZIM, Zim Integrated Shipping, ASTL, Algama Steel, and AMTD, which is AMTD Idea Group. Now, the reason we have so many stocks in this portfolio is to be diversified. Some, like QFIN, have performed extremely well. It's up 87% from where we bought it. Other stocks, like ZIM, have not been performing well. That stock is down 41% from where we bought it. But overall, with this diversified portfolio, we're up 3%. And that's the whole goal. Now, the longer we hold these stocks, the more they're going to go up. especially as money starts flowing into value stocks, we should see these rise pretty quickly. Now, every single time I've done a buy, I have looked at the PE ratio of the stock. I've also compared it to the sector average in trying to determine what stocks to buy. And in fact, I included an entire playlist on this channel of every single time we've done a buy. I've gone through the stocks, shown you the PE ratio, explained the stock a little bit, and also reviewed them when we dollar cost averaged in. And you can watch all of the videos we've made for this challenge in the Millionaire Club portfolio playlist, which is on the homepage of this channel. You should also know that whenever I make a buy, I immediately post the buy on Twitter. So you don't have to wait for the video to come out. You can follow me on Twitter at twitter.com/realscottcurry, and you can get the buys as soon as they're made so that you don't miss out on any opportunities. Now let's get into the stocks that I bought on Friday. I bought 20 shares of FINV Finvolution and 5 shares of SBLK Star Bulk Carriers. Both of these were a dollar cost average in, and in both cases, I was dollar cost averaging up, meaning I was buying more shares at a price higher than my original buy. Now, over the past few months, we've been dollar cost averaging into our stocks. And up until this week, I've been selecting stocks that had low PE ratios. Some cases, I selected stocks that were down that I thought were getting extremely undervalued. But this week, I did something a little bit different, and I simply selected 2 stocks that we have not yet dollar cost averaged into. In fact, going into this week, there were only 3 stocks that I had not yet dollar cost averaged into. I selected 2 of them. So these weren't the best stocks to buy, but this does help even out the portfolio and keep the diversification in place so that we're not getting too heavy into any one stock or any one sector. The first stock I bought was FINV Finvolution, which has started to rise a little bit recently. This stock has a current PE ratio of 4.19 compared to a sector average of 18.75. So this stock is still very undervalued. The other stock I bought was SBLK, which is Star Bulk Carriers. SBLK has a current PE ratio of 2.24 compared to a sector average of 1.66. So compared to the sector average, it's really not the best stock to buy. However, it is still undervalued. If you're wondering which shipping stock has the lowest PE ratio, it's ZIM. That is the one that we've been buying into a lot, but we're down 40% on it. So at this point, I've got plenty of shares. The PE ratio is extremely low, and I'm just waiting for that one to turn around and start going back up again. And if you wanted to know where to buy these stocks so that you can make money with us in 2023, I recommend opening up an account with Moomoo. Moomoo is currently offering 10 free stocks when you open an account and deposit $100, and they're offering 20 free stocks when you open an account and deposit $1,000. And each of those stocks is valued up to $1,000. So when you open an account and deposit $100, you're going to get up to $10,000 worth of free stocks. And when you open an account and deposit $1,000, you're going to get up to $20,000 in free stocks. Now, you do have to keep the money in there for 30 days in order to get your free stocks. So you can't just deposit and then pull the money right out. This is really designed to deposit, start buying these value stocks so that you can make money with us this year. If you want to take advantage of that, you can sign up for Moomoo at stockcurry.vip/Moomoo. That's stockcurry.vip/Moomoo. If you got a lot out of this video and enjoyed it, please be a good friend and share this video with your friends and family so that they can start making money in 2023 as well. And make sure you hit that like button and subscribe. And if you want to know what we've bought in the past, make sure you watch the prior video that I uploaded here.